Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. And of course last week we did see again another breakout to the upside with commodities. Copper prices breaking out for a fifth straight week, hitting 10-year highs, up over 60% so far this year. We've also seen platinum prices surge to a 6.5-year high as automakers continue to ramp up EV production in response to changing consumer demand. And we've also seen silver prices break out 2.5% on Friday, trading above $27 per ounce, only $3 away now from the February peak. And finally, we saw energy prices breaking out to 13-month highs, and we capitalized on that, banking 1,000 points profit. So of course, for every one lot that you would be trading for 1,000 points profit, that's going to be $10,000 of profit. And for every 10 lots that you would be trading, that's going to provide you with $100,000 of profit. Now, as we go into next week, we will be watching gold prices here very closely. Gold came down on Friday, retested 6-month lows, albeit for a very short period of time. We subsequently had a slingshot move off $1,760 per ounce, a 300-point breakout to the upside, and then we settled around $1,784 per ounce into the close. So we'll have a look at that very shortly. In total, over 27 commodities ranging from the metals, energies to soft commodities all have posted double to triple digit gains over the last 6 months, and this is really just the beginning here. Evidence is mounting regarding the new super cycle which is underway for commodities. Definitely one of the most lucrative asset classes to have in your portfolio. As we know, bull markets, they don't go up in a straight line. They will zigzag, presenting savvy traders with incredible opportunities to take advantage of this volatility in the market. Goldman Sachs described commodities as their preferred asset class over the next decade, and as retail and institutional interest continues to grow, this will keep driving prices higher, especially considering the fundamental backdrop for the entire commodities complex, which remains extremely bullish. This is of course supported by a glowing list of factors which include money printing, more stimulus, accommodative Fed, risk of inflation, new COVID variants, near to negative interest rates, and waning confidence in job and business security. Now with that, as we move into a new week, the major news items you want to have on the radar next week will include the following. Traders will be watching closely next week's Federal Reserve Chair Jerome Powell's testimony before the US Senate. Traders will also monitor Jerome Powell's comments for clues on whether the Fed will ignore rising inflation and keep rates near zero. Traders also want to see under what conditions the Fed would be looking to introduce yield curve control. Previously, when the Federal Reserve controlled the yield curve, that created deeply negative real interest rates, which fueled a bullish backdrop for commodity prices to slingshot much higher. Other key macro events to look at going into next week include US Q4 GDP data and the Fed's preferred measure of inflation, which will be core PCE price data. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we go into a new week. Firstly, moving over to silver. Silver prices broke out on Friday, up 2.5% on the day. And you can see again how sticky this $27 per ounce handle has been. So we keep getting multiple taps of that zone, support coming in. We did actually see a very temporary break below that level from Thursday through to Friday, just 2 minutes before the start of the Asia Pacific session, which if we show you on just a much lower time frame here, you can actually see where we had that very sudden sell-off to the downside. So this was just in the matter of 2 minutes. However, silver, it shot down to $26 per ounce, and then within the matter of 15 minutes completely recovered that, and we were trading essentially right back above $27 per ounce again on Friday, closing at $27.22 per ounce. So what does this tell you about silver? It tells you that it's very resilient right now. Any pullbacks are immediately getting bid back into. Silver's had a strong close here into Friday. What we really want to observe going into next week is to see whether silver can continue to get a bid from here and have another retest back towards the 28 level, which we've seen tested a number of times over the last month. And if we can break above 28, this is really where you start to come back up to the previous block here, and you're making a move up to 29, and then you're not far away at all from the $30 per ounce level. And of course, Goldman Sachs recently increased their profit target for silver from 30, which got hit previously right at the end of January, to $33 per ounce. So we're at a point here where if we can get some momentum going into next week, and if we were to see a squeeze here on silver, taking the price above 28, we could very quickly accelerate to the upside. Then what you want to have a look at is platinum. So platinum is very close to 6.5-year highs again here on Friday. We've had 3 retests back down towards $1,250 per ounce. Each time, platinum spends very little time on retracements here before it gets another bid, and now going into a new week, we're very close from a potential breakout back towards the 6.5-year highs. So platinum so far over the month of February is up 17%. So it's been a phenomenal run here for platinum. And what you want to look out for is if we do see a bid for platinum, for gold, and also palladium, which closed up 1% on Friday, and over this month so far it's up 7.5%, so we could well see a continuation there for palladium. We've got 4 positions which are long on palladium right now. We in fact also have 4 positions long from silver on both of those markets. What I would look out for is if we can get that breakout and continuation at the beginning of the week across platinum, palladium, and also silver. This will also drag gold higher, which is lagging at the moment. So we've had a retest back towards 6-month lows here on Friday. We just about came and clipped the previous low of November before we immediately saw a 300-point rebound in price. Bear in mind that overall sentiment out there on gold has dropped to the lowest levels in a year. So often from a counterflow point of view, this is where you can see these bounces and fast retracements to the upside. Friday was a great example of that with the rally that we saw into the close. Bullish engulfing candle. We've had a tap back down to a previous level of support. It's basically been a bear trap. So you've just about taken out retail traders' stops in the market. Then you've seen a squeeze and a reversal to the upside. And as I mentioned, if we do see silver and platinum and palladium get a bid at the start of the week, this of course can help gold in correlation to then start to get a bid here. So what I would look at going into next week is the potential, if we do see a strong move on the other metals, for gold to do well at the start of the week here. Now, what I would look at if we drop that down just to the lower time frames is the potential for gold to then start to make a move up to the levels that it broke down from. What we might see is once we get a pickup in momentum here to the upside, we may start to stall during the middle of the week. We want to observe if we can, first of all, get this additional follow through here for the metals. So again, if silver and platinum start to break out to the upside at the start of the week, which typically this time of year, last week of February, is strong for the metals. If we do see them get a bid, this is where gold would very likely get a push to the upside as well. But then once we get into the middle of the week, you may start to see this rally pause, and then it's going to be at a decision point again here. So once we get a breakout back to the previous neckline, then this would likely be a decision point for gold. But certainly at the start of next week, I would look out for this potential scenario to play out. And then if you look at the dollar index here, you will see very clearly where the dollar is under pressure over Thursday and Friday. And then going over to the energy markets, as we mentioned, this has been a great trade for us. Energy prices broke out to 13-month highs last week. We continue to remain in our long position here, which is up 1,300 points into the close on Friday. We've had a little bit of a pullback on Friday, but we're 13% up so far in the month of February. So they also look strong alongside palladium here, which is up 7% this month, platinum, which is up 17%, and silver, of course, into the close, which is up 2.5%. So really that is what I would have on the radar as we go into a new week. What we're tending to see out there a lot at the moment is technical traders who are just using indicators which are just outdated, gimmicky, and what they tend to do is they keep buying at the highs. We see this a lot each time gold looks like it's about to break out. Their technical indicators are all firing off for a buy. They get trapped at the top, they FOMO in, and then they get liquidated. And then when the price breaks down to the sort of levels that we saw on Friday, they're also panic liquidating out of positions just before a potential impulsive bounce to the upside is about to occur. We see it day in, day out in this market. Again, I've mentioned it many times, but gold certainly is not a buy and hold market. It's terrific for trading, but it's not a buy and hold market. You want to keep coming in and out of this market nearly every single week at the moment. It's a great way to capitalize on gold currently, and this is likely to stay for some time on this market. Just this continued range-bound price action where the volatility week to week, you can see anywhere from a 500 to a 700 point move for gold. It's absolutely perfect for trading. And essentially, you want to be trading the same way that the professionals do. You can't just rely on technical analysis or outdated indicators. You need to be utilizing market intelligence, research, data, marry that up with daily, weekly, monthly cycles, quarterly cycles in the market. Be aware of key liquidity zones which are targeted, which will help you massively with not only entering trades, but also banking profits at optimal times as well. You should also know the seasonal plays in the market alongside ratios, intermarket, correlations, and capital flows. This will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You also get access to real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.